Good morning from Baltimore. This is Alistair Williamson. Today's the 19th of March, 2017. This is a warning to all U.S. real estate speculators. Let's get started and take a look at two data sets. The first is in blue, and that is the U.S. NHB Housing Market Index. Very important to note, when the index prints over 60, it is in overbought territory. The second data set is a U.S. Fed's fund rate, and what we notice, very interesting, that there are four precedents, and this is how it works out. When the NHB Housing Market Index tags over 60, the Fed tends to raise rates to cool the market. And then what happens in the first precedent? Prices crash. Let's go to the next precedent. This is in the mid-90s. You see this big upward thrust in the NHB Housing Market Index in overbought territory. What does the Fed do? Raise rates, crashes prices. Let's take a look at the dot-com period. Once again, another upthrust. The Fed said, wow, this is an even bigger bubble. We have to raise rates, but just so small. Look at this, just so small. Crashes prices. Once again, upward thrust in the U.S. NHB Housing Market Index. The Fed raises rates, crashes housing prices. We've known that as 2008, 2009. And look at this, the zero lower bound. U.S. NHB Housing Market Index is well over 60 into 70 at some of the highest points that we have seen throughout time. And the Fed is hiking rates again. Is it different this time? That is the question to the real estate speculators. Is it different this time? We're working off of 1, 2, 3, 4 precedents over 25 to 30 years of data, which suggests when the U.S. NHB Housing Market Index is over 60 and the Fed is in a rate hike cycle, housing market prices tend to decline. Very interesting. So this is a quick note to the real estate speculators, is that what comes next? Is it different this time? Is this fantasy of flipping homes and buying homes and just to the everyday person, is this market going to continue on a linear trajectory? I'll tell you this, it will not. So once again, heed warning. And that warning is a rate hike cycle. The Fed will continue to raise rates until something breaks. And you have to be very careful of interest rate sensitive industries, especially housing. So the recap here, U.S. NHB Housing Market Index is overbought. Throughout time, the Fed will raise rates because they know it's overbought, and housing market prices crash. This is the making of the Fed. Nobody else controls this. This is the Fed, the Federal Reserve.